Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 17th, 2017. Now to get started this week, we're going to do things a little bit differently here. We're going to be looking at our direct intermarket correlations with regards to the US dollar index. So when we look at our current market situation here, we can see that we have the blue line crossing over the black line to the downside, and we have resistance on the dollar index currently at 101.25. We can see that there is a very, very strong intermarket correlation between the equity markets, specifically the S&P, the Nikkei, the DAX, and so on, the global indices to the dollar index. So as the S&P 500 moves lower, we can assess here that essentially the dollar index is moving lower also. Now we can see this very clearly in the Nikkei 225. As the Nikkei moves lower, the dollar index starts to lose its strength. Now the DAX 30, again, another major indisputable intermarket correlation where we can see the crossover on the DAX is putting pressure on the dollar index and fueling strength towards the euro currency. So these are all direct intermarket correlations we want to watch very closely. So in short, if the global indices, the global equity markets are moving lower, chances are the US dollar is moving lower. We can see it also in the CAC 40, the French index, almost 100% correlation. Now with our main commodities here that we really want to watch here, guys, next week, is we always hear about the oil and the dollar move in opposite directions, when in actual fact that's not really true. We can see here that with this resistance that's built up on the dollar index at 101.25, oil has paused also. Now, when we look at these past intermarket correlations between, this is not an inverse correlation. Actually, it's a direct intermarket correlation. Whenever oil goes down, the dollar is shortly thereafter follows. And we can see this very, very clearly in our trade setups. And this is what we want to watch using our intermarkets. Now the same thing applies to RBOB gasoline contracts. We can see that as we've got a top in on the gas contracts, the dollar starts moving lower, gas starts moving lower. So when we're looking at our main Forex pairs, we pretty much have to be looking at gold here, guys. You can see that as gold starts to advance higher, the dollar immediately pauses and starts moving lower in a global risk-off environment. Now, this could very much fuel a potential euro rally. Now, when we look at this correlation right now, once again, to the dollar index, we can see that there's a 100% inverse correlation. So if the euro goes down, the US dollar index goes up, and that correlation is about 90%. So this is a correlation we want to keep an eye on. Now next week for the euro, we have heavy support coming in at 105, about the 105.60 area. You can see that we've got basically what could be potentially a triple bottom, but remember we have the French election coming up and things are going to get very, very choppy. Okay, but right now for next week, I would be looking for potentially the euro to turn back to the upside if the sell signal on the dollar index continues to advance. This would put direct downward pressure on US Swiss franc. Now with US Swiss franc, you can see the direct intermarket correlation here to the dollar index is a very powerful one. If we connect this, we can see that when the dollar index sells off, the US Swiss franc sells off. When the dollar index rallies, the US Swiss franc rallies. This is what we really want to know and understand in our Forex trading, that we're either buying or selling US dollars at the end of the day. So for now, heavy resistance around the 101 area, selling into that area to start the week is a reasonable play. Now, when we look at the British pound going into next week, we have pretty rock solid support here down at 123.70. Longs carry the edge while we're above here. Now again, you can see whenever the dollar index has moved lower, the British pound US dollar has advanced higher. Now we've gone through a bit of sideways chop here, but ultimately the British pound has advanced to the upside. So to begin next week, the area we want to watch, make sure we stay above the 123.70 area. Longs carry a slight edge while the dollar index continues to move lower. Now with the dollar yen, you can see from last week we've had heavy support down in this 110.10 area that I talked about in last week's Forex Weekly Outlook, and basically I suggested that if this level breaks, we want to sell immediately. Now this is a very, very powerful signal from VantagePoint. Basically gave us a 3 to 4 day warning that this was going to happen. We broke through this support level and down we go. Now a lot of global conflict has aided that, but the fact of the matter is we got the signal before any bombs were dropped, before any comments were made by Trump, VantagePoint was already forecasting a decline in this particular pair. So in order for the dollar yen to continue to move lower, we need the global indices to continue to move lower also. Now, with the USCAD pair going into next week, we've enjoyed very good shorts on Trader Planet here. Now, when we look at this closer, you can see that we do have some pretty significant support sitting at the 132.55 area. We've managed to poke through there, but we keep recovering. Now, the signal is still on a sell at the 133.50 area, and again, that's pretty much where this trend line is going to come in, right just below that 133.70 area. So as long as we hold below 134 here, guys, shorts are still in play in my respectful opinion. Now, as we come into the other two main commodity currencies, New Zealand US, Aussie US, you can see that essentially as the dollar index comes under pressure, New Zealand starts to recover. So we have pretty heavy support right now, just above the 69 level. We are kind of flat here. A lot of indecision at 69.70, but if we can break free and clear of 69.70 next week, then we should be able to advance higher. Now with the Aussie, strangely enough, it's already could be a leading indicator for the New Zealand pair. We've got a buy signal here, heavy support at 74.60, and it suggests that we could advance higher. Now we're only 1 or 2 days old here on this particular crossover, and we're only 1 or 2 days old on the dollar index move to the downside. So for the most part, we can see that when the dollar index moves higher, the Aussie US pair moves lower. But in this particular case, if we can advance on this sell signal right around this 100.52, then that should put upward pressure on the Aussie US pair for next week.